Power Business with Sfisos Kanjana on Power 98.7.
Power listener, it is 24 minutes after 7 o'clock, and as I said, we're in conversation with Fred Razak, who is the Chief Trading Strategist at CMTrading, or CMTrading rather. And we were talking about, of course, the work that he's coming into South Africa to be doing, and just also took a walk down memory lane around the psychological journey around how do you get into trading, some of the things to think about, and also some of the risk pressure points that you tend to find there. And as I said in the earlier part of the conversation, number of things that we spoke about, ultimately be good at one thing and recreate that success that's coming directly from Fred, transferable skills in trading, and move that what you own as a knowledge set into also how you think about trading. But also, Fred, we find ourselves in an environment, of course, where these trading platforms are digital for the most part. We don't no longer go into the exchanges and we're there with papers, share certificates, and we're screaming the numbers out saying I want that at this price. It's no longer a live auction of the shares that you want to buy. But what it means also is that people then are vulnerable. They're vulnerable to cyber attacks, phishing, and all of malware and all of those things. And also they're vulnerable to these people who are fake traders and trading experts as well, and tell you, come ask me how. And I'll tell you how to double your money in a week or whatever the case is. How do people respond to that?
So number one, and the most important thing, is that you have to make sure you're dealing with someone that's regulated. I mean, this type of environment, unfortunately, attracts a lot of nefarious type of people and business people. So number one, just make sure that you're dealing and working with a regulated broker. There are certain standards that are in play. There are certain software that we embed into our back office to make sure that there's no to a certain degree, there's always a safety net in order for clients to protect themselves. Banks use them, financial institutions use them. So, I mean, if the World War III happens tomorrow and all the servers in the world are destroyed, we're all subject to that, right? So that's, so it's like, yes, are we away from the paper trades that they used to, trade on the floor of the exchanges? Absolutely. But at a certain point, there's also a digital world that has backup to those digital footprints that we do. Especially in our case, where you could actually see on our end the digital the digital footprints of any client anytime they're opening or they're logging into the trading station and to the platform, or they're even opening up just a graph. Right, so we're able to see that both for regulatory standards for your protection and our protection, right? So these are things that we've implemented and are as a standard. So I think that goes across the board everywhere we are in the world. And servers are backed up, obviously, whether they're a index like the New York Stock Exchange or the JIC for this example. And everybody's digital today. There is no longer a floor exchange.
Sure. And then, just to then getting to some of the closing points, I said we would come back to this point around the role of behavioral economics in trading outcomes. Some of the literature will talk about recency bias. And so if you recently lost money, you kind of hang on to that, or then also becomes related to anchoring, which is also a bit of either behavioral finance or behavioral economics, as well as a couple of others, right? And so simply people will have winning trades and losing trades, and that results in a behavioral response. And you spoke about Prof. Andrew Huberman as well, who then looks at the neuroscience as well. And we've got a neuroscience center in Pretoria, which is also quite interesting through the BMR, which also tends to, we do a lot of analysis there in terms of how people respond to even graphs, to how you write an investment story, etc. How do people then overcome these behavioral outcomes that come through as a result of a bad trade?
Well, so number one, never put yourself in a position. This was the first, this was the first word of advice I've ever been given when I walked into Wall Street. Never put money you can't afford to lose.
Sure.
Okay. So it could be on a trade per trade basis. It could be on a yearly basis. It could be on a decade basis.
Can I date someone I'm not willing to lose?
Well, to a certain degree, if you have an attachment outcome to anything,
sure.
Okay, psychologists will tell you that you are more prone to mess it up, so to speak, than if you're emotionally disconnected with it. We all get into relationships. We're all emotionally invested in a relationship. There's nothing you can do to skirt away from that, right? When it comes to business, okay, you have to, so to speak, it was really a great motivational speaker who said you have to sometimes just be strong enough to walk away and to being objective about the particular trade. And there's 2 points about what you said about losing trades and how do you, number one, never put yourself in a situation that you've devastated yourself so badly that you can't come back. Yeah. That's number one. Number two, have I earned the right? Have I earned the right? Did I put my time and my energy of trading this particular trade with everything that I know that I've earned the right to take this trade?
Sure.
That's a serious person.
Love that.
And number three, and this is probably the most important factor about trading, is that for me to get into an investment, it costs me money. Meaning my point of entry is a, so to speak, a cost of goods sold. When you're a business person, right, and you're buying merchandise for your store, right, you don't say to yourself, oh no, I'm going to lose money on milk, right? And there I'm not going to be able to make money, so I must as well just close the store. No, you're going to buy milk, and even if you lose money on milk, you'll be okay with it because you'll make money on peanut butter or chocolate or some of the other items that you have in your store. So when you look at losses in a particular limelight of, it's part of doing business, and it's something that I can pre-accept a certain number before I do the business, that you don't devastate yourself. So for example, if I go into a trade knowing that I'm going to lose $50 and I've lost it already, then I could be objective about that trade. So I could be less outcome focused and be just concentrating on the trade to see, oh, it's not working out at $40 and say, you know what, I'm going to close the trade. It's not working out.
100%. Power listener. And there you have it. We were in conversation with Fred Razak. Fred, thank you very much, and we really appreciated some of those nuggets that you've shared.
Thank you so much.
100%. As you heard it, put money in that you're willing to lose, but earn the right to trade on that money, but also look at some of those monies as cost of goods sold and not an opportunity cost, because making losses is part of doing business. Look at your trading, of course, as part of doing business. Thank you very much, Fred, as I said, and all the best with the trips that you're doing in South Africa, and hoping, of course, that you've got a lot more people learning a lot from the work that you guys are doing.
Thank you.
Bread, milk, cheese.